Hello everybody, welcome back to another reasonable price prediction, the series where we try to figure out where your favorite altcoins could be headed. Now today we're back with Rune, and in this video we're going to take a look at two key stages that Rune experienced during its previous cycle. Well, technically over two cycles, its first cycle and during its second cycle, and we're going to be comparing it to what we're currently going through, and we're going to see how many similarities we can draw between the two stages and which one we are most similar to. And once you've decided which one you think that is, you'll be able to more accurately predict where Rune might be headed. So taking a look at the current price action that we've experienced ever since November, we can see we moved up, had a really nice strong price movement from Rune that brought us up into this kind of range, which set highs of $7.40 and lows of about $4.10, give or take, and we moved up into this range. We visited the low, we visited the high, and then we actually broke above this range back in March. More or less all of March we spent out of this range, we broke above, but I will say the whole crypto space experienced kind of a euphoria here where a lot of highs were put in, and then like the rest of the crypto space after that as well, we had a bit of a hard come down and kind of nothing's happened really ever since. And this all happened just before the halving, and as you can see we traded down into the halving, even dipping below our bull market support band during the halving and leading up to the halving, to only then come back above more or less immediately after the halving. And then again, what we're currently experiencing live now, it looks like we could be going down below our bull market support band again after touching these highs, the range highs that we set earlier in November, December time. So we could be on our way down to touch these lows, or we could be seeing a Wyckoff method play out where we see this a high and a low, we set in a higher high, we set in a higher low, and potentially we might move to the upside. So that's a case if you want to be bullish. You could say we're in a Wyckoff accumulation, we're setting in higher highs and higher lows, we're about to break up past this range and see strong moves. And there's a good case for that as well, not just because you could argue it's a Wyckoff method, but also because of what we've seen Rune do in the past. We can see Rune has made very strong movements before, kind of when it's been in similar ranges before. We can see last time leading up to the halving as well, Rune was also in a similar predicament where we set in a kind of range high, we set in a low, and we operated within that range for 24 weeks before the halving. We had our strong green candle that brought us into this range, and we stayed in it up until the halving, which was 24 weeks. If we go back to where we currently are, we can see it was 24 weeks ago before the halving that we had this strong green candle that brought us into this range. Now you'll notice that last cycle, this first cycle, we didn't have a move that broke us out of this range. We kept finding resistance at this 13-cent level, which is crazy to say 13 cents, but that's where it was, and the lows at the 5 cents. So we can see from the high to the low, and I'm only counting closes and opens, I'm not counting wicks, we moved 132%. Now, if we take a look at how much we oscillated from the highs to the lows, we can see we moved 113% during this same time frame from the highs to the lows. Of course, again, only counting opens and closes. Now, if you want to count from the range high to the range low, that's a different story, but then you could also kind of poke holes in the range itself because technically we've broken above it. That's up to you to have a go at. Another thing that we noticed that was different from this first cycle pre-halving period was that the low came after the high, and funnily enough we saw that with this second cycle after the halving period as well. The low came after the high. So here we're already seeing things play out differently so far, I will prefix, as we haven't yet put in a lower low. We could be on the way to doing that. We could come down back to this low now that we've been rejected by this top, and we are now down below our bull market support band. There's a case to be made that will move to the downside. However, again, you could argue the Wyckoff. You could argue that every single time we've been in one of these kind of situations like this, one of these ranges like this, we've always ultimately broken to the upside. And if we take a look at the first cycle, we were pretty close to dipping down below the bull market support band towards the end. We were riding the bull market support band for a while until we rocketed up. The second cycle, not so much, but finishing up with the first halving, kind of pre-halving comparison first, if you think this is the one that we're most similar to, you might expect a 720% move after the halving, or once we break out of this range. We are now, of course, after the halving, but only a few weeks, well, about a month now actually. And we can see Rune took a few weeks to make its move to the upside after the halving. It might just be a couple of weeks late here, who knows. So again, a 700% move. If I zoom out and show you the scale of it, it would put you at about $60, $58.50 to be precise. So a very strong move. However, a lot of people have been talking about a left translated cycle. And what that basically means is the price action that we're getting now happened much later on in the previous cycle. And where we saw this kind of range happen before the halving, a left translated cycle theory would say that we would have gotten this range sometime after the halving instead of leading up to the halving. So if you're a left translated cycle theory type of guy, if that's what you believe is currently going on, you would be more inclined to believe that this range here that happened after the halving is more like what we're currently going through. Now, there is a couple of problems with this. The first one, the range the volatility that we saw within the range was about 180%. And over here, zooming in at what we're currently at, it's about 113. So definitely a difference there, not lining up too nicely yet. Another thing to look at is the bull market support band. Again, we kind of stayed well above the bull market support band, riding into the range. We come back down and went below the bull market support band initially. And note that we also put in our low below the bull market support band here, only for us to rally back up, and we didn't go back down below the bull market support band until we'd put in our all-time high. That's not quite what we saw play out over the last 6 months. We can see we rode the bull market support band up into the range, so tick there, but we didn't have our low below the bull market support band. Technically, you could argue we did wick below the bull market support band to put in our low, but the opens and closes were all above. We did touch it, we did operate within the range technically for one of them, but we more or less, we did stay above the bull market support band if you're counting opens and closes. We have, however, come back down below the bull market support band now. So you could argue that we haven't had our low yet, and that we're going to put it in now that we're down below the bull market support band, or now that we're looking like we're going that way. And that would also make it a kind of more similar situation with the highs and the lows, where we get the low after the high, like we saw in these two cycles. In terms of time frame, again, 24 weeks for when we got this green candle into it before the halving. Here we got 26 weeks entering into this range, and then after 26 weeks, we'd made the green candle move that brought us out of it. So you could argue that, well, it's not going to be 24 because we didn't move above on the halving date. We didn't have a halving date comparing to that. So far, it's been 30 weeks and we still haven't made this move out of the range. So it's looking less and less similar to this guy. If, however, we are kind of here, we're in the left translated cycle theory, and you want to assume we're going to get the same returns that we did last cycle, 176%. I will drag this up for you. That's not that far. 176% would put you at a $140 rune. Crazy price action there. I don't think we'll see that personally. Could be wrong, but I don't think we'll get that kind of price. It would give Rune like a $60 billion market capitalization, which I don't think is something that will happen in one bull run. I think that's like a very long time for an altcoin to get to that stage, in my opinion, especially an altcoin that's already in the $1 billion in terms of market cap. I don't think you multiply that by 1700%. Now, I could be wrong, but that's just me. That's what I think. And ultimately, it doesn't matter what I think. It's all about what you think. These videos are kind of put here to help you figure out what you want to do. Now, looking at the Bitcoin pair, again, same kind of scenario. This one, however, I would argue, is much more similar to the left translated cycle theory than it is to the 4-year cycle theory. Because if it's a 4-year cycle theory, we should be seeing similar price action during similar phases of the cycle. The left translated cycle means we're getting it early. So here, kind of the first thing that's obvious is that in the left translated cycle theory, we traded down for a while. Here, we traded down, or we are trading down still for a while. Again, we kind of had our strong move up, riding the bull market support band up, and we come back down below the bull market support band and spend a good bit of time there. We wick back up to the highs of the bull market support band, but ultimately come back down again before we move up. Here we see we ride our bull market support band up, we come back down below, we test the highs of the bull market support band and do break above ever so slightly, just for us to come back down, and now we've retested it again. That's the key difference so far. Here we've retested it and we've kind of been rejected, whereas here we didn't really get, you could argue, well technically we did get rejected, you're right. We got rejected here and then moved back up into it again. So you could say that that's happening here, that we'll have maybe this week nothing happens, and then after that green week galore, kind of just green candles everywhere until we move above this high that we set in before. This is at 9,500 satoshis. This candle that we set in here was at 17,500 satoshis, so we might see a move of like 19,000 satoshis, 19,500 satoshis. That's where we might move up to if that is going to play out that way. Again, from the high to the green candle that brought us out of this trend, it was 20 weeks. We have gone over 20 weeks from this high, well, to the halving was when we kind of went out of that range. But in my opinion, the BTC chart lines up much better with the left translated cycle here than it does the 4-year cycle theory. That doesn't mean we're going to disregard it though. We saw very similar to the US dollar chart, the 4-year cycle theory puts in a high and gets rejected off it a couple of times before breaking above. Now, I'm pretty sure we had 3 rejections on the US dollar chart. Here we had 2. It's not much of a difference. Ultimately, we were kind of putting in higher lows while getting rejected off this high. So this move to the upside was pretty much inevitable. Also notice that we didn't really break down below the bull market support band. We put wicks below the bull market support band, but we didn't have any closes below the bull market support band. And from the high to the, oh well, that was to the halving, but I should really have it to the one that brought us out of the range. I'll have it 26 weeks, 26 weeks or 27 weeks. From the high to where we moved out of the range was 26 weeks. Now, if we take a look, the 20 weeks was kind of where we're currently at. We put in the high 20 weeks before as well. Bit of a coincidence, or maybe not, whatever you believe. But also taking a look at kind of where we are now, 26 weeks, we've kind of gone past that range. So neither of these line up really in terms of time spent in the range. Now, if we kind of move this stuff back, very rough to how it was, we can see it was 53 weeks after the halving that we put in a high. So if you want to say that we're in this kind of range, and then 53 weeks after the halving, we're going to get a high. That puts us out in kind of Q2 of 2025 when we're going to get our all-time high. Now, I think we'll probably end up moving above these ranges, but these 2 resistance lines are going to be serious problems for Rune, in my opinion. We'll either shoot up past them or we'll spend a long time getting rejected by them. And currently how Rune has been going on about, I think it's kind of a high that Rune will have a hard time getting above. That is, of course, where we were rejected multiple times towards the latter end of the bull run and the start of the bear run. And then our all-time high is also going to be a strong resistance. And these respectively are at 25,000 satoshis and 42,000 satoshis. I think we've got a bit of time before we have to worry about that resistance level. Again, like I said, we kind of have to break above this previous high of 18,000, 17,000 satoshis before we really start talking about that. But again, if you want to kind of assume that we're going to make moves, if we're going to move similarly to the left translated cycle theory, a 1000% move would be pretty similar of a move to where we are now. If I actually bring this up to where we are, we can see that we could expect a price of Rune to be at roughly 80,000 satoshis. I think that's probably off the table, but you never know. Again, Rune isn't a spring chicken anymore like it once was in terms of kind of, you know, being new and exciting and attractive. And while it definitely has performed really well this last cycle, it was one of the first alts to really take off. Even before Solana, I think Rune was doing well. You just still can't say whether a price is guaranteed. Although I do think that the fact that it did well during this stage is an indicator of strength. A little thing to worry about, in my opinion, though, is the trading volume. If we kind of take a look at trading volumes that we were getting before the halving, here recently, and trading volumes we were getting arguably in a more similar time. Especially if you're going for the left translated cycle theory, this is more or less exactly where you think Rune is now. The trading volume is literally a tenth of what we got here, which is a little bit worrying. And again, over the space of 5-6 weeks here, we've had $7 million of trading, which is a little bit worrying to me. You could argue that's because, it's got a higher TVL. There's less of it being traded around because more of it's locked up. Again, I think, to be honest with you, you've already come to this video with an agenda, and whichever narrative or agenda that is, you'll find reasons to kind of keep believing or reinforce that narrative or agenda. But I think it is important to take a look at other possibilities, even if you don't think they're what's going to happen. I have my own narrative and agenda, but I like to keep my perspective open just in case there is something that I'm missing, that I'm not something aware of, and I like to challenge that perspective. Anyway, that's going to do it for this video. If you liked the video, leave a like. If you didn't, leave a dislike. Check out the Twitter and the Reddit if you want. There will be links to them in the description. And consider subscribing, as that really does help out the channel. Helps out hugely. So thanks again so much. Take care and peace.